Hello to all our friends out there in the financial advisory group universe. Today, we have a video that's going to briefly discuss qualified charitable distributions. What are they? How do they work? And are they something I should consider? So as we go through this, it's important to look back a little bit and say, why are these becoming something that people are talking about more recently? Well, a couple things. One, a couple years ago, the government changed our tax tables so that we each get to take a standard deduction if we'd like, that's much higher than it has been in the past. What that's enabled a lot of us to do is we don't itemize our deductions anymore. So what we do is we just take a standard deduction, and therefore all the things we used to itemize and add up, we don't do anymore because they don't add up enough to make up to what our standard automatic deduction is. So in the past, we would give to charity, add that into our itemized deductions, and sometimes that would be greater than what our standard deduction was. Now that the standard deduction is so high, a lot of times when we give to charity, you're really not getting the tax benefit anymore. Now, full disclosure, the reason to give to charity isn't just to get the tax break. It's, of course, to have some type of charitable intent. But what a QCD or qualified charitable distribution allows you to still take that standard deduction, but also get that tax break on the donation. So as you'll see in a slide later, it's a win-win. So it's just a donation directly from your IRA to the charity. It cuts out yourself as that middle person, which we'll talk about in a minute. The best part, you don't pay any taxes on the funds that go directly to the charity. That's right. Uncle Sam gets no piece of what you give directly to that charity. And if we talk this through, right, in the past, if I would take $10,000 from my IRA, take it into my hands, and then give it to the Alzheimer's Association, I would have to itemize that on my tax return in order to get that deduction. Today, because standard deductions are so much higher, like we mentioned, I can still give those funds to the Alzheimer's Association, but really I'm taking the standard deduction, so I get no additional tax benefit for making that gift. If I change the logistics of this, if I take the IRA distribution and actually have it go directly to the Alzheimer's Association as opposed to coming to me first, it cuts the IRS out of it. And now that $10,000 goes directly to the Alzheimer's Association. They get the gift, which is a win. And on top of that, I don't pay taxes on it. It basically doesn't appear on my tax return. That's what we call a win-win. So why use them? The tax savings, right? We get this tax savings for making a contribution to support a cause that we care about. That's important. Obviously, we want to support these causes, and usually if we can save on taxes, that makes sense as well. Also, a big plus here is not to make it more confusing, the age for qualified charitable distributions, which you'll see on the next page, is 70 and a half. This also counts towards your required minimum distributions. So as you get older, and there's different ages for this, it's either 70 and a half, 72, 73, or 75. Of course, we have to make things confusing. Taking a qualified charitable distribution does count towards your required minimum distribution. So it's a double hit. You can take it, it counts towards your required amount Uncle Sam makes you take, and you get to make the charitable intent of the contribution. How it works. We mentioned it before. You have to be 70 and a half or older to qualify to do this. You tell your IRA custodian wherever your IRA is held that your donation is for a qualified charity. The charity gets the gift, you get the break. It's that simple. The biggest thing is not to receive that check yourself made payable to you. Now, logistically, sometimes it's best to have that check sent to you, just to go over a little bit of the details, but the check would be made payable to the Alzheimer's Association, not to myself, and then I deliver that check to the Alzheimer's Association. Like the screen hints here, this is sort of like a secret financial handshake. A couple key points to remember. One, we mentioned that 70 and a half rule. Two, you can donate up to $100,000 each year. Although now that we're in 2025, that's been in the past. We did, or that was raised to $105,000 for 2025. So that number is now higher. It only pertains to IRAs. For some reason, the rules say you cannot do this from 401ks, 403bs, or retirement plans. It must be done from an IRA. One of the reasons that it may make sense to look at moving a 401k to an IRA down the road, it must go to a qualified charity. A 501c3 corporation is how we typically refer them to. Most charities you think of, whether they're local, national, any organization typically count. The one asterisk here, which we get asked a lot, unfortunately, kids and grandkids, they don't count as charity, even though they might argue they should. Lastly, there's no freebies. Like most gifts, when you give this gift, if I give that $10,000 for the Alzheimer's Association and they in turn give me back box seats to Steelers or Ravens games, technically that wasn't really a gift, right? I got something back in return. So there's no freebies allowed. So in short, I hope this helps explain a little bit more of what qualified charitable distributions are. They're something that are a much used tool today. We use more and more. And as you approach age 70 and a half, we'll talk to you about it more and more, especially if there's charitable intent and if you prefer not to pay taxes. Thank you again. We look forward to having a couple more of these educational videos every year. Thank you again, as always, for the trust and confidence you place in us. We look forward to talking to you soon and make it a great day.